Hi friends, as we have covered the topic partnership in the previous lecture, so we are continuing with that topic. As in the last lecture we have gone through the journal entry, that is the capital contributed by the partner. As what is the difference between the capital contributed in case of sole proprietorship and the capital contribution in case of partnership? In the last lecture that we have studied, normal in the sole proprietorship business the entry will be cash account debit to the capital account, but in case of partnership business, as there are minimum 2 partners, so the entry will be cash account debit to the name of the partners. Okay, so the entry is cash account debit to M's capital account debit to O's capital account. And before going to the further entries, let's look at the next topic, that is P&L Appropriation Account. Profit and loss appropriation, that in 11th standard you have studied about somehow. Profit and loss account, profit and loss account, trading account and the balance sheet, and its order will be trading account, profit and loss account and the financial statement, that is balance sheet. But in case of partnership business, one separate account is also prepared, that is called as P&L appropriation account, and this account is prepared only and only in case of partnership business. This account is prepared after trading account and profit and loss account. It means that it is an extension of P&L account. P&L appropriation account is nothing but the extension of profit and loss account. In profit and loss account, we are charging all the indirect expenses and recording all the indirect incomes of the business. But in P&L appropriation account, we are not doing such things. We are doing the distribution of profit. What we are doing? Distribution of profit. The question arises, what is distribution of profit? So distribution of profit means distribution of profit amongst the partners in various manner. Various manner? What type of various manner? So either if a partner has devoted full time to the firm, so he will get a salary from the firm. If he contribute towards boosting the sale of the firm, so he will get the commission from the firm. If the partner has introduced capital in the firm, so he demand for the interest against his capital, because if he invested that amount somewhere else, so he will definitely get some return out of its capital. And the last thing, that is the profit, means the distribution of profit in form of salary, commission, interest on capital and profit. Apart from that, distribution, before distributing the whole profit, sometimes on the basis of prudence concept, firm creates some reserves for future contingencies. One thing that I want to tell you, that I am also taking online classes. If you want to avail the classes, you can contact me at my mail ID, that is sodaniankur1@gmail.com. Yes, SODANIANKUR1@gmail.com. Okay friends, now we are moving further to our topic, that is distribution of profit. So it is not about charge, it is distribution. It means that if there is a profit, then only we can distribute the profit. It says that in case of loss, what we will going to distribute, means this account is prepared only and only in case of profit in the business. Say, suppose I am having 100 rupees and I have to give salary someone as my partner as a 50. So can I give that amount? Yeah, definitely, because the fund is more than the amount which I have to give. But what happen when if I am having 100 rupees and I have to give interest on capital of 500 rupees? Okay, we will discuss that somehow we will give the interest to the certain extent. But what happen if I am having 0 rupees in my pocket? So how can I give 50 rupees or 100 rupees or 500 rupees to my partners? In that case, we are not going to prepare P&L appropriation account. Means the condition for preparation of P&L account is that only when there is a profit in the firm. No matter the profit is sufficient or insufficient. It is one of the major topic. Insufficient, it requires some skills and some sort of analysis and some calculation, but it is simple and straightforward calculation in case of sufficient profit. So first we have gone through the journal entry, and then later on we will prepare ledger account for P&L appropriation. Before going through, I am going to discuss some 2 to 3 crucial points regarding P&L appropriation. First, it is an extension of P&L account. It is created only and only in case of profit. Third, the nature of P&L appropriation account is nominal account. It is a nominal account, means it is created for a specific time period. The balance of such account is not carried forward to the next year, and it is also called as below the line profit. Yes friends, P&L appropriation account is also called as below the line profit, and P&L account is called as above the line profit. Now we are moving towards the journal entries regarding distribution of profits in various manners to the partner. So first entry, and first we have to learn what are the distribution for the firm and what are the incomes from the firm. So distributions for the firms, or we can say distribution, and on another hand the income of the firm. So distribution comes when salary, distribution in form of salary, commission, interest on capital, fourth reserves, and fifth is profit distribution, and one income that the firm will charge from the partner, that is interest on drawing. As I thought that you are quite familiar with the distribution and income now. Distribution is somehow related with expense, but we can't say it is an expense, but the treatment of the items of distribution is same as of expense. Let's look one by one. First, salary. We are going to give salary to the partner or the employee of the firm. In that case, in P&L appropriation, we will give salary to the partner. So the journal entry for the distribution of salary to the partner will be partners salary account to AMS capital oblique current account to O's capital oblique current account. We will discuss what is that funda of capital account and current account, but normally the entry for recording the expense will be debited. Now the question comes, why we are not crediting cash account? So remember that whatever amount we are giving to the partner is given in credit. No journal entry for cash is given. If the cash entry is given, then it is somehow treated as a drawings out of profit. So we have to record that journal entry, that is partner's salary account debit to M's capital account to O's capital account. At the end of the year, if suppose it is not a partner's salary, it is just a salary of an employee, that is M or O. So what will be the treatment of that salary account by the end of the year? It will be transferred to P&L account. In this likewise, in the same manner, the salary account, that is partner salary account, will be transferred to P&L appropriation account. So the entry will be P&L appropriation account debit to partners salary account. That will be the transfer entry. Now the second entry regarding commission. If a firm offers commission to the partner for boosting up the sales of the business, the entry will be partners commission account debit to M's capital oblique current account to O's capital oblique current account. In the same manner that we have done regarding the salary, by the end we have to transfer the partner's commission to not P&L account, to P&L appropriation account. So the transfer entry will be P&L appropriation account debit to partners commission account. Now moving to the third part, that is interest on capital. If firm is giving interest on capital to the firm, it is again a distribution of profit. It is not the income of the firm, because firm will going to pay for the capital contributed by the partner. So the partner will be benefited by investing capital in the firm. So the entry will be, again it is considered as an expense. So interest on capital account debit to M's capital oblique current account to O's capital oblique current account. In the likewise manner, the interest on capital will be transferred to P&L appropriation account. So the entry will be P&L appropriation account debit to interest on capital account. Friends, I am assuming that firm is giving salary to both the partners, commission to both the partners, and also assuming that both partner has contributed the capital. That's why in each and every entry I am crediting two partners. And also one of the assumption that in my firm there are only two partners. Maybe there are more than two partners, as we have discussed, that maximum partners may be 50. So we have to credit the name of each and every partner on the basis either on the interest on capital or for partners commission account. Now the next thing, that is the thing which firm is charging to the partner, which is the income of the firm. Have you remember what is? Yes, it is interest on drawing. Interest on drawing is the amount that firm charge to the partners, because firm is giving a facility to the partner to withdraw some amount from the firm for their basic needs, for their daily livelihood. But the main thing that you have to understand, there are two types of drawing. One is withdrawal of capital and second is withdrawal of profit. And withdrawal of profit is considered as a drawing for partnership firm, and interest will be charged on that amount, not on withdrawal of capital, because if we are charging interest on withdrawal of capital, it will going to be injustice for the partner, because his overall capital will go down and definitely he will get less amount of interest on capital, first drawback. And on the other hand, we are charging interest on the same amount, so it will going to the injustice to the partner. So always remember, interest on drawing will be charged only in case of drawings out of profit, means either interest on capital ड्रॉ किया हो उसने, या फिर सैलरी, या अगर हम बात करें तो प्रॉफिट विड्रॉ किया हो. नाउ द एंट्री विल बी इंटरेस्ट ऑन कैपिटल, सो इट इज चार्ज फ्रॉम द पार्टनर. तो पार्टनर्स कैपिटल ऑब्लिक करंट अकाउंट, और वी कैन से एम्स कैपिटल, एम्स owes capital oblique current account to interest on drawing account. As it is the income for the firm, so it is credited, and the transfer entry for interest on drawing will be interest on drawing account debit to P&L appropriation account. Interest on drawing will be credited in P&L appropriation account, while interest on capital, salary, commission are debited in P&L appropriation account. Now the next thing, that is reserves. It is not a distribution to a partner, but it is prepared on the basis of prudence concept that in case of any future contingencies, firm is ready to bear that amount of contingencies out of its own funds. So reserves are also created out of profit. If there is no profit, there will be no reserve. So reserves, the entry for the reserve is P&L appropriation account debit to reserves account. Now the question arises, why reserves accounts are credited? So reserve is the liability for the firm, because that portion of amount firm is not giving or not distributing to the partners. So in case if there is no future contingency and in future firm will going to dissolve, that portion of amount is claimed by the partner as their right, because currently we are not distributing that amount to the partner, we are retaining that amount in the firm. So there is only one journal entry in case of reserve, that is it is created out of P&L appropriation account, and reserve account will be credited. Now the last entry in this segment is distribution of profit. In case of distribution of profit, the journal entry will be P&L appropriation account debit to AMS capital oblique current account to OS capital oblique current account. Profit will be distributed in the ratio as defined by the partners in their partnership deed. It may be equal ratio, it may be 1:2 ratio, it may be 5:3 ratio, depend on the question to question. So the distribution entry for profit is P&L appropriation account debit to AMS capital account to OS capital account. Now the question arises, what will be the journal entry in case of loss? As I have told you earlier that P&L appropriation account is created only when there is a profit. So what happen in case of loss? In case of loss, P&L appropriation account is not prepared, so the loss remain in P&L account, and directly from the P&L account the loss will be transferred to the partner's account. Transfer means debited in each partner account in their profit sharing or loss sharing ratio. So the entry will be AMS capital account oblique current account owes capital oblique current account to P&L account, that is profit and loss account. So that is all about the journal entry portion in case of partnership. The first entry, that is interest on capital, then salary, then commission, then interest on drawing, then distribution of profit and distribution of losses. So now we are moving further regarding the ledger portion, that is profit and loss appropriation account. So we are moving.